When the Reserve Bank Board meets on Tuesday, you'll almost be able to hear the sound of high fives all round out in Martin Place, with economic growth and inflation both hitting the RBA's bullseye. But last week it was a grim Federal Reserve Chairman Ben Bernanke who fronted his peers at the annual Jackson Hole Symposium. But are things really that good here and bad in the US? I spoke to one of the least dismal practitioners of the dismal science, Adam Carr, senior economist at the big British finance broker ICAP. Well, Adam, everyone's gloomy about the US economy except you. So why are you so optimistic?
Well, I think that if you look at the enormous amount of policy stimulus in place, I think that lays foundations for a decent recovery. I think also, if you look at corporate and household balance sheets, we've seen a fairly significant improvement on that front. I don't think we'll be getting back to normal, but I do think that, having had a recession for a couple of years, the US consumer and businesses are well placed to pick up the slack from unwinding fiscal stimulus.
Well, the specific problems that everyone talks about are firstly the overhang of debt and secondly high unemployment and the weak labour market. Now, we are seeing a change of behaviour in the households and we're seeing an increase in the savings rate, but you obviously don't think the problem's too great.
Unemployment is going to be a problem for years to come. I'm not saying that it's not going to be. The US lost 8 million jobs. That's not going to be replaced overnight, but we need to look at what's happened over history. And if you look back at past recessions, a high unemployment rate hasn't been an obstacle to decent growth rates. And there's a very good reason for that. And that's because within the national unemployment rate of about 9.5%, there is a vast skew. So higher income people, higher skilled people have a much lower rate of unemployment. So for instance, graduates have an unemployment rate of about 4.5%. So you've got a good proportion of the population. I think graduates are about, by themselves, about a third of the labour market, who are very well placed. They've got record low interest rates, they've got cheap petrol, they've got very cheap houses, everything's cheap. So for them, life's going to be very, very good. And I think they will be the ones to drive consumption going forward.
You must be feeling vindicated by the Friday payroll numbers in the US, which were much better than expected.
Yeah, I think it's a good signal. I don't want to get too excited just yet because the numbers do bounce around. I mean, it wouldn't shock me at some stage if we saw a negative print, private payrolls falling, for instance. So we need to be careful, but I think it is a good signal that not all is lost on the US economy, and that whilst we should be cautious, I don't think we should be pessimistic.
Do you think a precondition of a strong recovery is a recovery in the housing market?
It isn't a precondition. We don't need a recovery, we just need the deterioration to stop.
Obviously the news in Australia is all good economically. So what did you learn this week that you didn't know a week ago?
That it's a lot stronger than, and I've been bullish, and it's a lot stronger than I was expecting. So I think we need to take note of that. Look, people are trying to talk down the consumer numbers. I think that's just being stubborn, basically. Look, the retail numbers have been very good for about 6 months. The GDP numbers showed consumers, consistent with what we've seen in the monthly retail sales numbers, rising at a very rapid pace, making a very strong contribution to GDP. So that's what I've learnt this week, and I think that the RBA will be looking at these numbers very seriously, and the downside to strong growth is perhaps that we'll see another 1 or 2 rate hikes this year.
This year?
Yeah, this year. I mean, the market is still pricing in rate cuts. I don't think, under the circumstances, I'd be controversial in saying that that's not going to happen. You would really need to see a complete collapse in the US economy, and given that the leading indicators are telling us that the US economy is holding up okay and accelerating, I think the best bet with the Australian data is to assume that we're going to get more rate hikes. Now, a lot will depend on the Q3 inflation number. Certainly if that's high, I think we'll get 2. If it's relatively contained, so for instance 0.7% on the cores, then we might only get 1. But a lot still rests on the CPI number, but certainly the RBA won't be cutting.
Thanks, Adam.
Pleasure, Alan. Thank you.